Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of XRP, taking a look at what's been going on most recently, what we expect to happen next and all that wonderful stuff. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Okay, there's a whole host of links down in the description below, everything from Patreon through to Nexo, Ledger, the community-led podcast, Bybit, BitGet, and of course, the most important, Discord link. So if you haven't already joined us down in Discord, link is in the description below. Check it out. It's a fantastic community down there and it's completely free and I don't think you'll be disappointed by what you find. And also check out any of those additional links if they are of interest to you. Okay, let's get right on into this. XRP paired up with USDT on the hourly chart here. Binance is the data source. Now, kind of following on from the last XRP video that we were talking about, obviously we saw a bit of a pullback. We've seen the moves in the market change and basically XRP's been up there as one of the coins that's been liquidating a lot of people using leverage recently. So we want to dive down into the structure, what's changed, what hasn't changed, and all that wonderful stuff. So from this view here, you can still see that the majority of this is still valid. There is nothing to worry about on the bigger macro picture here, at least I say hourly chart as a macro. This structure is all valid. This is looking pretty good. There isn't a worry about this. Obviously, a lot of the micro movements that were happening inside this little area down here over the last couple of days, this is the one that's mainly the concern. And we're going to just basically zoom right in and pay attention to what is going on in this little zone. But do be aware that we are still expecting this move up here, okay, although the targets will change a little bit, and then we'll pull back down again into this kind of lower range. And then, of course, we'll move back up into another high range before potentially pulling back down into another low range, okay? So nothing moves in straight lines. It is basically a move up, a move down, and then another move up followed by another move down. Now, obviously, inside all of these moves, there's going to be a whole host of additional pieces of volatility. You're going to go up and down all over the place as you generally move and gravitate towards one of these zones that I've drawn up in these yellow boxes, okay? So you don't think things go straight to these zones or go straight down to the next zone. They actually bounce around whilst gradually gravitating towards it. This is because people are using leverage and people are getting liquidated in their longs and shorts whilst the price slowly, gradually works its way towards these ranges here. Okay, the structure here is basically mapping the psychology of people. This is what Elliott-Wave theory does. If you're not familiar with Elliott-Wave theory, join us down in Discord. We've got a PDF that's 181 pages that explains the theory. And it's very well practiced on the stock market. And people like it, don't like it. Some people don't fully understand how it works and why it works. Some people just say it's like reading a horoscope, for example. So each to their own. I'm going to focus in on what I know and what I do, which is Elliott-Wave theory. You like it or don't like it, it's entirely up to you. Join us in Discord if you want to know more about it. Let's go ahead and just zoom on in. Okay, we're going to focus in here. Now you can see this kind of long, this part here. If I just expand this up, you can kind of see this move up and we can see three clear waves coming down. Now everything moves in terms of 5 or 3 waves. Now we can obviously break those 5-wave structures or 3-wave structures into multiples, but generally speaking, we look out for 3 waves, we look out for 5 waves. Those are the key things that we normally want to pay attention to. So, for example, we have a very clear structure going up here, but there isn't really clear waves going in. So it looks like one straight line coming up. Then, of course, we break down. Now we're going to draw these out so you can see we have basically this 1, 2, and 3 wave here. I'm just going to use A, B, C, but it could be W, X, Y. It doesn't really matter. I just use 3 waves as 3 waves regardless, okay? And so we have A, B, C here, okay, coming down, 3-wave structure. Okay, we can also see the very much the same thing here, 1, 2, and 3, going up in 3 waves, okay? 3 waves are deemed corrective, meaning short-term. They're not long-term, they're not trends, okay? So when we see 3 waves, we know that they're going to reverse on us and we're going to go down. Now here we can actually see 5 waves, so 5 waves to the downside, okay? So this is 1, 2, 3, 4, and 5. Now, 5 waves are determined as trend setters, okay? These are basically trending in a direction. Now, the important thing with 5-wave moves is they are very strict rules about them. Where they appear, how they appear, what happens afterwards, what happens inside them. For example, wave 4 can't cross wave 1, right? And obviously wave 3 should be 1.618, right? So there's a lot of rules to bear in mind when we see 3-wave structures or 5-wave structures, right? So understanding where this 5-wave structure sits is very important, because if we actually start to reflect on what's going on here, what do we see? Well, it's actually a 3-wave structure like this, okay? And we know it's a 3-wave structure because this C wave is not 1.618 times the A wave in length. Okay, now what does this mean? Well, it means we've got 3 waves here as we drew up, and we had 3 waves going up here. Okay, and basically that's a 3-3-5. Now, a 3-3-5 is a type of 3-wave structure. It is basically a corrective short-term play and is not a trend. So when you start seeing these 5-wave moves, it's important that we also take into consideration what happens beforehand. So when I start to remove these sub counts, what we actually are left with is this 3-wave structure taking us down to this point here. Okay, so we have a very straight line coming up here and going straight up, and then we have this choppy 3-wave correction here. This gives us a pretty clear indication that this corrective move is over, and we should start talking about moving upwards. Now, we have to consider what was happening before this 3-wave structure. Okay, that's this drop here and this move up at this particular area. Okay, so it's possible that this 4th wave in its entirety is not done yet, and we're still waiting to see some more volatility. It's also possible that this here is the start of a 5th wave up higher, and this would be classed as wave 1, with this 3-wave structure that we just mapped out as a wave 2. Wave 2s are typically anywhere between 50 and 88.2% retracement of the entire wave 1 move. And here is pretty clear this is very, very deep to this low point here. It's almost 100% retraced that entire structure. We saw this rapidly move up. I think this was happening on the 23rd. We saw a rapid movement upwards. We saw this pull to the downside. We completed this, I think, yesterday around midday, and now we're starting to see this move upwards. Now, this move upwards is also looking like 3 waves at the moment. So let's go ahead and dive down into this. Okay, so does it look like we've started our wave 3, right, which would be an interesting move. Now, for the most part, it doesn't look that way. However, there are some clear things that we should be aware of. There are things called leading diagonals, and leading diagonals are 3-wave structures strung together inside a 5-wave move. So, for example, if this was a 5-wave structure, you'd have 1, 2, 3, 4 overlaps, wave 1, and then a wave 5. Okay, and each of these would have 3 waves inside them. Okay, so this is a type of structure that would only appear at the beginning, as in a wave 1 structure, or we'd have it as an ending diagonal, which would be at the end in a wave 5 position. Okay, so knowing that we were expecting a wave 3, and wave 3 should be containing 5 waves in itself, this could be a start to that. However, it doesn't look like that is the case at the moment. So we want to be a little bit cautious and a little bit aware of these things. But at the moment, it looks like we've had 1, 2, and 3 up. And it looks like we are about to have 1, 2, maybe 3 down. Okay, meaning that this might just be the wave 1, wave 2, we haven't had wave 3, 4, or 5 out of that leading diagonal yet, okay? So this is an interesting structure. This also, it looks like a head and shoulder pattern for anyone who's a pattern trader. Let me go ahead and just grab hold of that. Let me grab hold of the head and shoulder here. You can kind of see, I'm going to take it from this neckline here. I think this is probably a better place to have it. So I'm just going to start it here just for the neatness of this video, but it might be placed slightly differently depending. So we'd end up with this kind of structure going on. Like this. It's actually really badly drawn. Let me see if I can get that on there, approximately like that. So basically 3 waves up, 3 waves down, looks very, very similar to a head and shoulder pattern. Let me go ahead and show you with the 3-wave structure here. So it goes up with 1, down in 2, up in 3. Okay, so A, B, and C is basically that side there. Then you can pull down here and you say, okay, well, there's 1, there's 2, and then you pull back down, going deeper, breaking the neckline, basically completing a head and shoulder pattern. It's basically 3 waves up, 3 waves down, or can be 5 waves down, etc. So when we start seeing things like that, we can obviously know there's patterns that people are going to pick up on as well. So do expect some volatility around this last little area here, specifically as we start to form out that right-hand shoulder. Now, from our stochastic RSI point of view on this hourly chart, we are heading to the oversold area, so maybe we'll get a break to the upside if we're lucky, but we'll be very, very aware that the rest of the market isn't necessarily going to be confident right at this particular moment. On the 4-hour, we're looking good. On the 8-hour, we're looking good. On the daily, we have to obviously come down. We've moved up quite a bit, but we have more progression to the upside before that happens. And of course, the weekly is looking incredibly bearish. So in summary, we have a structure that may may or may not yet be complete down here. We're waiting for confirmation of that within this next structure. Okay, so essentially we want to stay above this low point at 45.76. Okay, that's going to be the key thing for us. If we can stay above that, then that would be good. But for the most part, we could look at this in multiple different ways. The one that we really want to see is that as wave 1, this is wave 2, and then we start up and with a nice wave 3, 4, and 5, and so forth, right? That's what we want to see. But in order for that to happen, we cannot really cross down any lower than we have done already. Okay, now if this isn't a kind of leading diagonal structure, then it's going to be really hard to identify. This is not going to be an easy thing to identify. Do expect to pull back again, getting close to this low point down here, but not actually hitting it. And then I think there will be a really strong run to the upside. We'll know a little bit more probably within the next kind of 24 to 48 hours on how that plays out. But if I zoom back out just a fraction here, guys, what we're looking for is this fifth wave here, taking us up into this yellow box, approximately between 58 and 63 cent. That's going to be the first kind of major area for us of this wave 3, and then we're going to retrace back down to approximately this area here, 46 cent, and then go up again between 61 and 67 cent before finishing this entire structure to the upside. Okay, so there's a lot of volatility, lots of moves to happen. Nothing's going to move in straight lines. Patience is going to be key. If we were to really think about the long in positions on this and trying to take advantage of this situation, then we're going to really want to pay attention to these low points that we currently have. So specifically around the 23rd of September, we cannot cross that. We shouldn't cross that low point. It's still possible that we can, but we shouldn't. So that's going to be, if we really must absolutely not wait any longer and want to long the market, that is going to be a key point that we're going to want to make sure that our stop losses are below that, to prevent ourselves getting unnecessarily liquidated. Anything above that is fair game as far as I see it. This could still be liquidated and stay within its structure. So just be aware that with XRP, expect a lot of volatility. There's a lot of emotions riding on it, but the structure still is valid. It's still looking good, at least up until we get towards these higher ranges. More specifically, I start to get nervous around the kind of 60 cent or higher. That's kind of where I think I would be more nervous on XRP. Guys, until the next video, have a fantastic day, and I'll catch you all in the next one.